if everyone has been able to open a demo account of synthetic accounts. Please, has everyone done that? Hello, can you hear me? Hello, can you hear me? Hello.
Hello, yes, we can hear you, sir.
Yes, sir. All right, thank you so much. Now, for tonight class, please, this is the best time for everyone to listen attentively. The more reason why I'm emphasizing about risk management is not because of any other thing than for us to maintain and keep our capital safe. That's why I always keep on emphasizing on risk management. Now, yes, was it not January 22nd? Yes, January 22nd. I opened a demo account of 500, which I was using to explain to everyone here, which is maybe our lecture, maybe class 4 or class 5 then. That's when I opened it. I was using it to explain to everyone. Now, if I should show you the accounts now, what I've turned the account to, you guys will be surprised. You guys will be really surprised. And what did I do? All I did was based on what? Risk management. And risk management is very, very important in anything you are doing because it's going to guide you and also make you to ensure that you are not over-risking your accounts and you are willing to make profit in the market. And it's very, very important to make profit in the market. Not that you won't accumulate losses. Losses is inevitable in this market. Same goes to normal business as well. Losses are inevitable. Now, please note one thing. Tonight, I'm just going to give something simple, not anything complex, something simple that can work for you guys as well. And while working for you guys, I want you guys to pay a full attention to what I'm doing. Why paying full attention to what I'm doing is going to also help you to understand that, okay, this is how the market look like. This is what you need to do. This is what you need to do. This is just the beginning part of it. And this beginning part, I've already started taking you guys some little things you need to know about the intermediate class. Some little hints about how the intermediate class is going to be. Now, let's look into it in full details. I'll be sharing my screen soon. It's just give me a few minutes. I'll be sharing my screen now. So we'll be able to look at it in details. Please, I don't know if my voice is audible enough.
Yes, we can hear you.
All right. So let me share my screen. Oh, sorry, let me just update this. If I don't update it, I'll be able to do my work very well. Which one should I use? Okay, so let it restart. Then while restarting, let me pick out my tools. My writing tools. X. All right, I've restarted. So let's look at any chart here. Let's look at GU, for example. Let's get into GU and see what's there. All right. Now, on this chart here, before I start doing anything on charts, I would like to show you some things. There are things you need to put in consideration. Should I use GU or I should just use another pair? Let's use another pair, correct? Let's use another pair. I'll be cleaning these charts. How do I clean my charts? How do I clean my charts? All right, let's just pick another pair entirely. Euro USD. Let's use this third one. Have I worked on this one so again? Sorry, let me clean everything. So please, I'm trying to clean my screen. Okay. Now, this is what we'll be doing. Before we enter this one, I said I'm going to show you guys one thing. And what is that I want to show you? I want to show you the account. Yeah, this is the account. As you can all see it. Initially, we deposited 500. That was last month. No. We deposited 500 into this account. It was January, let's say from January 10. Now you can all see the deposit was 500. It was a demo account which I created. So we deposited what 500. And now let's look at something together here now. We should know what we call proper risk management. Are we together? Hello, can you hear me?
Loud and clear.
Okay, very good. Now, when we started these accounts, initially, I started it on the 19th. Yes, on the 19th, that's when I made these deposits. So I started it on the 19th. I took a demo account, which I was using this one to explain regarding risk management. I opened 0.01, then I also opened 0.05, which I later closed myself. Then I entered another trade, which was our next class. And that trade, I took it on the 22nd. Yes, we had class on 22nd, which I entered US Oil and GU. That same time, you can see the time, it was 8:33, which is related to 9:30 when I was explaining about these two pair. Now, one thing I want you guys to understand here is that it's all about risk management. When you apply proper risk management to anything you are doing, it's going to turn out very well. Patience is also a very, very vital thing you need to learn about. You must be very patient in the market. When being patient and you apply proper risk management. Now, on this account, initially, I shouldn't be using nothing above 0.05, but I use 0.1. And when using 0.1, what did I do? I only opened one position. Initially, I wanted to open two positions. I told you that the way you calculate your lot size, how can you calculate lot size regarding risk management? I explained this part to you, which I said you calculate your capital, 500, divided by 8,993. It's going to tell you the lot size you're expected to use on the trade. Is that also? And I said on a $100 account, you can open maximum of what? 2 positions. And that maximum of 2 positions simply means that for you using 20 lot size, that means you're only risking what? $2 on the account. Is that also? You're only using what? $2 on a $100 account. So please note what I'm saying. On a $100 account, using 20 pips as your stop loss, that means 200 points times 0.01 is going to give us what? $2. That means I'm only risking $2 to make any amount I want to make. Are we together? So, but this is a $500 account. I should be using 0.05. If I should calculate it, it's going to give me 0.05. But because I'm risking 2 positions, that means I'm risking 0.1 in total. 0.05 in times 2, or 0.05 plus another 0.05 is going to give me what? 0.1. That's why I said I'm risking what? 0.1 on this US Oil and GU, which I traded on. And this is the profit I made, which I had to close it myself. Then the next trade I took was, what was the date? It was on the 5th of February. Yes, when we had another next class. I took this trade and I hit stop loss of what? 21. Now you can see the loss size I'm using. The reason I'm using 0.03 because gold is very volatile, very, very volatile. And the account then was around 800 plus because of the two profits I've made from US oil and GBP USD. So I know that normally if I want to use loss size, my loss size should be within what? 0.08. And that 0.08 now, divided by 2 because you are trading gold. You can't use it for currency pair. Gold is not currency pair. They are energies, like they are commodities on their own, like melters. Do you get it? Gold is a melter, it's under melters. So I can't use the loss size I'm using for currency pair to trade gold. So that same amount, I divided it into 2 instead of me using 0. This thing direct. I divided it. So why dividing it is going to give you something reasonable. So instead of me using 0.04, I just decided to use 0.03. Then I set my stop loss to be a very wide stop loss because I'm risking low to make what? Bigger profit. And why am I risking low? The reason I'm risking low is because I'm using a very low loss size. Now, from this point here now, if you want to know the amount of loss size, the amount of pips I'm using as my stop loss here now, is very easy. Just take the stop loss you have here. What's the stop loss we're having here? We're having what? 21.33. Then you now divide it by the loss size. It's going to tell you the amount of points. And that point now, if you divide that point by 10, then it will give you the amount of loss size you are willing to risk. Now, let's look at it here now. This is 21.33. 21.33 divided by 0.03. Okay, 0.03. You can see I'm having 711. 711 divided by what? That's 711 points divided by 10. That means I'm risking 71 pips because I wanted to swing the trade. But what later happened, the market kicked me out. It's my stop loss. So at this point here now, if I should now look at it with my balance, I only risk $21.33, just only one position of it, only one position on an $800 account. Are you getting my point now? That means it won't affect the account too much. It won't affect the account. Are we together? Then the next trade I took the next sell. I took the next sell when I see that the market has reached my main entry zone, where I'm expecting the market to reach before I can enter the main one, because the minor one was violated, which was the one that hit this stop loss. Then the market keep buying till it reached my main entry. So that my main entry is a very confirmed zone. Like I can use my hand to beat my chest that at this point the market is going to retrace, is going to react at this level. That's why I entered 4 position. I first took the first one. I closed it when the market was not down, it was not moving the way I expected. Then I opened what? 4 solid position. And those 4 solid position was what you can see. I never changed my loss size. The reason why I didn't change my loss size on gold, I'll tell you the reason why. Now, as a trader, when whatever loss size you start with for that account, don't change it. Just keep on using it like that. It's going to be accumulating the money for you. See the month's end. Once the month's end, you'll be able to know that, okay, I was consistent using this loss size on this account. Initially, the account is $500. I'm expected to use 0.05. But due to the fact that I'm applying risk management on the account, even though my account is 1,000, I never go beyond 0.05. Are you getting my point? I never go beyond 0.05, but I can open multiple positions. That means I can open like 1 or 2 positions because the account size is becoming bigger. But if your account size is exactly 0.5, then I only open 0.05, maybe 2 positions at most. But I'm having an $800 account. Then I open that many positions. I open 4. Because it's almost approximately to like maybe 1,000. Do you get it? Then I open 4 positions to trade. I know what I'm actually willing to lose at this account. For the 4 accounts together is 100 on an $800 account. All my stop loss is 20, 20, 20, 20, 20. It's not even up to 100, it's around 80. Like 10% of the account is what I calculated. I get my point. But you being a trader, you need to understand how to apply proper risk management to whatever you are doing. It's going to help you save your account. Now let's go back to our trading view. Now this is Euro USD. This is Euro USD. The first thing foremost, as a trader, you need to mark out what we call high and low. This is a new concept. This is a new concept entirely. And I don't even know how I'm going to break it down because it requires me turning my screen, rotating it, so you can all see what I'm talking about. You can't do analysis on a horizontal zone. I have a lot of things on this chart here. Okay, let's continue. Let me just use this zone here. Let me do this particular zone here. What we are having here. I'm just taking it as record. Do you get it? This is on weekly time frame. That means what? Each candlestick represents what? 1 week. Each candlestick represents what? 1 week. Each candlestick represents what? 1 week. Are we together? That's what it means. Now, at this point here now, the first thing I have to do, I have to bring out my tools. Now, I've brought out my tools. So please, if this thing pop out again, let me just click on OK. So it will work normal. It's because I rotate my screen. That's why. Please just hold on. Anytime I rotate my screen, that's what it always do. That's what it does. Let me unlock it. Okay, we are back. Now, at this point here now, there's one thing we call high and low. Now, this level here is a high. You can see the line I'm drawing. That's the high. That's the higher high. The highest high that market have never tested again. That's the higher high. Then the one below here is a lower low. That's the lowest low. Remember, we are using weekly time frame. So from this point here now.
I'm sorry. I'm not seeing what you are drawing. I don't know if I'm building one.
Hello, can others see my screen?
We can't see what you are drawing, but we can see your screen, but it's just stagnant.
Yeah, let me stop sharing and share back again.
All right, I think that should work.
So please, few minutes. Phone is misbehaving nowadays. I don't know why. All right, I'm coming. Where is zoom? So a few minutes, please. Okay, zoom. Let me stop sharing my screen first. Now, can you, sorry, a few minutes. Can you all see my screen now? Can you all see my screen now?
Yes.
All right, let's go back to the class. So what I did wasn't that much. I only mark out this zone here. I only mark out that up, which is our higher high. Then the downside here, which is our lower low. Let me write it out so you can all see it. This is so frustrating. My phone is misbehaving. Seriously, big time. This is higher high. This guy here is the higher high. Sorry, this is the higher high. And this zone here, just working on this place here, this is our lower low, LL. There's what we call high and low in the market, and there's what we also call higher high. Higher high is the highest level in the chart, and the lower low is the lowest low in the chart. Because when looking at it now, if I should draw another line so that you guys can see it, I should draw another line at this level here. you can see that it's not lower enough compared to this other one here. This one is not lower enough to this one here. This is the lower low at this point here. This is the lower low, and this is the highest high. Because when looking at it, this high here is not compared to this one here. This one is not up to this. Can you see it? That one is not up to that. So that's the difference between them. Now, you've marked out those zones. So after marking it out, then you need to go down to your lower time frame. We go down to our lower time frame to daily time frame. Then we have this. This is what we have. Is that not so? This is what we have. Now, on this lower time frame as well, we have some highs and lows. There's what we call internal and external highs and lows. Are we together? Now, when talking about internal and external highs and low, like this guy here now, this is an external. Sorry, please. This my phone is busy. This is our external high, and this is our what? External low, because it comes from a what? From a higher time frame, which is weekly time frame. Now going down to lower time frame like hours. Daily time frame too, you can use it as your higher time frame. Do you get it? But if you go to lower time frame, or let's call it smaller time frame, we have lower time frame, we have smaller time frame. They are two different things. When we say lower time frame are your hour time frame, like 1 hour, 2 hours, 3 hours, 4 hours, and the likes. Those are our lower time frame. So let's go to our lower time frame, which is H4. Now, coming to H4 here now, I have to shrink it a bit because we are going to a lower time frame. We started from weekly time frame. So if it's laptop now, you guys will see it much better. Just bear with me. Now you can see the visible high and low, right? Can you all see my screen?
Yes, you can see your screen.
All right.
Yes.
I'll have to press that OK one more time. And if I press the OK, if you do not see my screen again, let me know. It's going to go blank now. Please just bear with me. Since it's high time to change. Can you see my screen?
Yes, your
Yes,
screen is
you-
still visible. I think maybe you should make a move so that we'll know if it's still
I've done a
responding.
move. Can you see it?
No, we can't
Nah.
see anything.
Okay, it's not there.
We can't see anything.
Let me go back. That's what I want to confirm first. That's what I want to confirm. Whenever that stuff pop-ups, it happens like that. All right, let me share back. I don't know. I can't put my phone in portrait. It's going to just start me. Can you all see my screen now? This thing is still happening now. Sorry, please hold on. I'm expecting it to pop out one more time. Pop out, it don't pop out. Okay. So one more time, please. I can't rotate. Once I rotate my screen like this, it will just start misbehaving. I don't know why. All right, let me share my screen. Let's continue. Because of time.
All right.
So now that I've marked out my highs and lows, can you all see my screen?
No, we can't see your screen.
No, we can't see anything.
Okay, let me go back. I told you if I click share screen now. Let me rotate it. Share screen. Oh, it's slowing down. Sorry, please. The workload on the phone is too much. That's why. Now you can see it now.
Yes, we can see your screen.
So let's continue. So we've gone down to lower time frame. We just manage it like that. We've gone down to lower time frame, and this lower time frame now we have these 4 hours. And how can you know if you're on 4 hours or whatever time frame you are, you just come down to this H4 here. You see where the right is 4H. Once you click on that point, it's going to tell you that you are on 4 hours. And from there, you can change it to any time frame you want to change it to. Now, let's look at it from other time. Oh, sorry. Let's look at it on other time frame. Now, you can see other time frame here. You can see the time frame. We have seconds, minutes, hours, days, months, range. Can you see it? Hello, can you see it?
Oh, yes, yes, so you can see.
Please, I want
Yes, you can.
everybody to be up to date with whatever I'm doing. Now, my major target on this time frame here is to mark out my highs and lows. Hereby, we will be looking for where support is now turning to become what? Resistance, or resistance becoming what? Support. And sometimes you can have support, double support to give you a future resistance. And also you can also have double resistance to give you what? A strong support. Now, coming down to this smaller time frame, which is 4 hours, you can take your horizontal line and mark out. You can see these three supports here. It's a very strong zone. Very, very strong zone. Now, if I should mark it out now, let me just click on it. Sometimes the reason I don't like using this strategy is because it's going to make my charts look so clumsy. Like it will be too jam-packed. And I don't like things to be too jam-packed. Now, sorry, before I click on it, let me just click out first. So I want to show you something before I do that. Aha. Now you can see my screen very well now, but I shrink it a bit. Now, I will now pick out, you can see this resistance here now. You can see this resistance. Once I click on it, it draws a straight line. And now let's trace what the straight line has done. You notice that this straight line here, because this is an open system, is that also this place is open. Now, if I should trace this straight line, market will always respect that straight line. You can see this one here now. What does the market do? The market respected it. Now, this is resistant level that I mark. This one here is a resistant level. Now, look at it. When the market was selling down, it respected it. It almost touches it, then buy back a bit before breaking it. Is that also? That means resistance has become what? A support zone here. Now, this support zone here is going to become what? A future resistant level. Now, what does the market did? It respected it while buying back. It reaches that level. It sell down a bit, went back again, tap it the second time, sell a bit before breaking it out. Are we together?
Yes, we are together.
Hey, please
you
come
understand
again. Hey.
All right. You can see the straight line I drew on H4. A straight line I drew on H4 here. This middle line here. You know, on weekly time frame, I mark out the highest high and the lowest low here. Then I went down to smaller time frame, which is my H4 hour. Then I was able to see another resistant level here. This is a resistant level. Now, once I mark out this resistant level, just pick it. Any open space, any open weak. Hereby is not clumsy in the center around, like something like this, clumsy here or clumsy here. This is an open weak at this level. This is another one at this edge here. I'm going to mark that too again. Welcome, ma. Good evening, ma. I'm going to mark this one too soon. Once I mark it out again, we'll be able to see where the market is going to come back to come and tap it. It's going to come tap this guy again. Now, this one that we drew here, this is a resistance zone. This up here is resistance. They are called resistance. They are called up. And this down part here are called what? Lows. These are lows here. These are support zone. Support is just like your foundation. Before you build a house, you need a foundation. Is that not so?
Yeah, that's true.
Very good. And this is your resistance, is your roofing, where you do your ceiling. You roof the top of your house. Whereby rays of light will not be beating people inside the house. Let's assume this is inside the house. If you do not have your roof, rain, sun, and everything will be entering inside the house, which you've built. And your foundation must be very, very strong, which is this guy here. Your foundation must be very, very strong.
But you have three lines there.
Hello, can you hear me?
I said you have three lines.
Yes, I have 3 lines. I have the reason why for this. This third one here. This third one here was one we drew. Let me delete it and we'll draw it back again. Now, you see that we have only two lines. The resistance and the support zone. The resistance is the roof, which is this guy. This is my resistance, which is this one at the top here. That's my resistance. That's the top zone. Then this one down here is my what? My lower zone, which is what? My support, my foundation line. Where I'm building my foundation from. And I'm going the house gradually, going the house. I'll go down to here, to the roof, to complete my house in the roof. So anything that is going to happen here is going to happen within this cycle. That's where market will be dancing within this cycle before it breaks either the top or it breaks below it. That's what market is going to do. Now, how will you identify where to enter your own market if you want to trade? Is what I'm explaining. Now, to identify it, I pick out this crossbar. Why picking out this crossbar? I'm only looking for eyes. Open eye. Like you can see this place is an open channel. It's a very open channel. Even this guy here too is an open channel. But when looking at open channel, you can see it tapped it the first time. The market respected it the second time. Then what? It falls. It's an open channel. So I can pick either it from this back here or from this front here. Picking it from this back here, you see what does the market do? The market, you can see this zone here, this other zone here. The market almost has respected it, but it breaks it a bit, then start selling. But if you go to lower time frame, you see that maybe the market tap it, respect it, and start selling. That's one zone. Then the second zone. The second zone is this one here, this internal one here. You can see this internal one. This internal level, you can see the market reached this level. It tapped it. This is the first zone where the market start tapping. The second zone, which it respected. Then let's click it from the first zone here, where the market started. Now, what will you notice? You'll notice that the market was respecting that level. Sorry. The market was respecting that level from this point here. You can see this is a resistance, another resistance. And there's one thing about resistance to support level is always very strong. Now, after breaking this zone, you can see this support here. This support, it almost touches this support here. You can see that our two resistance is forming what? A strong support zone for the market to buy before the market breaks it. And once the market breaks it, it breaks down, coming down to this level. This one too that comes down here, and this one too. There are some other previous things that has happened in the market that makes this market to reject at this point here, start buying. And also at this point here to start buying again. There are previous charts behind, which I didn't go back to go and check. Are we together? Now, this support and this resistance forms this what? This support at this level here, this one at the center here, that makes it buy back. Now, this support here now is going to give us what? Future resistance, which is this resistance here. When the market reaches this resistance, what does the market do? It falls. It came back the second time. It falls a bit before it what? It breaks it out. While breaking it out, we have another resistance at this level here. The market comes back to what? To respect the resistance again. Are we together?
Yes, we are together.
Very good. Now let's look at it. This is a resistance here. What does the market do? The market came to this resistance. You can see this is the internal resistance here. You can see how small it is. This one here. This internal resistance at this level here, which the market respected alongside with this one. You can see what does the market now later do? Let's look at it together. It respected it the first time at this level before coming to this second one here. Then look at it at the third one yet now. Then the market starts pouring down again. Same thing goes to this support. You can see the support. If I should draw the support line now, let's look at it. Let's see it together. I'm coming. You can see the support forming this resistance here. Can you see it? You can see this support too. You can see the support. Now, what do you notice? You notice that the market was respecting what? Support at this point to form this resistance here. We sell down a bit, then form another support for this guy to continue buying. The market sell down again, reaches this support zone, respected it, buy again, break it out. While breaking it out, it came back again to test it. Now, support has given us what? Resistance here. the market sell down, melted, then start buying. It reaches that same level again, sell a bit before what? Breaking it off. Now this resistance now become what? Our future what? Support at this level. The market start buying again. Now come back again to that same level again. Breaks it a bit. Now started buying gradually, slowly and steadily. Can you see how support and resistance is working now? They are very easy to identify in the market. Just go and check your previous charts. You see them a lot. You see them a lot. You see them a lot. Are we together?
Let's start together.
Yes.
Very good. So that's what I want to explain for you guys for tonight. And should I say we should call it a day, please? I don't know what the time says right now. This is almost 9:30 already when we need to end up the class. So that's how it works. And market has always been like that. You can see this is another example here. Let me pick out my horizontal line. Okay. What do you guys notice? Okay. You can see what I'm saying now. That's a resistance. Forming what? This support zone here. You can see. Let me pick it out so you guys can see what I'm saying. You can see this resistance, this double resistance here, forming to become what? A future support. You can see the support zone here, which the market is trying to, it didn't reach the FV niche, but it respected it and started what? Buying back. Are we together? Please,
Yes,
do we
sir.
all see?
Yes, yes, we do.
Very well. Now, there is another one again. You can see this is an internal support here. It's internal support, but it's not valid. This is another one here. You can see this support zone here. This is a valid one here. Now, at this zone here now, what do you see? You see that the market support, resistance, then tap it again one more time as resistance. You can see that once the market reaches that level, it comes down. It reaches that level, it comes down. Then it breaks it. When breaking it, it sell down again. While coming back, it reaches that level, come down a bit, then break it again. Then come down again, melted. Then go again, break it. Now, we're expecting the market to what? To come back around this level, then continue buying. Now, we have what? Resistance all through. Then we are expecting a what? A support zone at this level to continue the buy. But if I should go closely to look at it, there is high chances to have seen it that you can see this support. And look at one of the buy. You can see that when I go closer, what did I do? You can see the market tap it and start buying. Is that also? No, we're having resistance. Now look at this buy here. You tap it and buy. Let's trace it. You can see that's the only buy. So we are still expecting it one more time to tap it, then continue buying. You can see the zone now. Hope you can see that level. You can see resistance. Then what does it do? Supports. It supports it to buy. Then now sell off again. Now, so we are expecting another what? Another support, then buy back again in the future. You can see once the market can come back down there, it's buy again. It touches the line of support to resistance and resistance to support zone. Touches it, then it continue buying. So that's how the market works. So what you guys will now do for me is that you go to your demo account and once you enter your demo account, you log into your SNES broker, you create a demo account, then make a SNES will ask you that how much capital are you willing to deposit. So click on 500, you type it there. Once you type 500, then you proceed to your MT4, either MT4, MT5, anyone you feel like using. Then you just have to pick a single pair, maybe one or two, either one or two. So try to look into the market using this small strategy I taught you guys. You can go to lower time frame, you can go to smaller time frame, you can go to bigger time frame, whatever time frame you feel like using. Go through it, enter the time frame, look at the market, just pick a single pair. It's even okay. A single pair. Then analyze the market, then trade. Don't look at it, but remember to apply proper risk management when trading. Hope you guys still remember how to calculate your stop loss and take profits. Based either it from trading view here or from your MetaTrader, you can calculate your stop loss and take profits. So the task here is that you'll be given a 7 days task. That means from Monday to Friday, you trade any pair you feel like, and we will have to assess you guys to know who understand what we call risk management. Please note one thing. Whenever you want to take any trade, you need a book, either a journal or anything, but just have a book whereby you have to write your entry points, your stop loss, and your take profit, and you take the trade. I don't care for the position you are opening, but ensure to take trades. So by Friday, you are all going to submit based on your record. And how are you going to submit based on your record? You open your record here. You can see this is MC4. You open your record. Then you click on each screen like this. Then I'll calculate it. Please ensure to always put take profit and stop loss. You can do maybe a screen record of your phone, or you can screenshot and drop it in the group. Then I'll access everything. And if you are shy to drop it in the group, you can as well drop it in my DM. But that my DM might be a somehow sluggish type because I don't really respond to DM so fast. But groups, I always respond very fast to groups. So that's what we are going to do for tonight. Then I'll access everything. Then I'll grade everyone based on their performance. Thank you. And if you have any question, you can proceed to ask me your question. Any question? Hello.
Hello, good evening.
Yeah, good evening, sir.
Thank you so much for the lecture. It was really an insightful one. My question is, in this, as you mentioned, you're going to give us exercises during this.
Eh?
My question is it compulsory that we always have a CP and an SL? Compulsory, really? Or there are options where we have
Okay, you want to scrap?
chance
Yeah.
maybe
I
avoid
make
it? 'Cause
mention
I
of
noticed
something.
the previous ones that you showed, not everything actually had such. So that's my
Well, based on that, you know, there are some trades that you can just scalp. Scalping, let me explain one thing here. Trades that you know you won't be sitting with, you have to put stop loss and take profit. But you know that you don't have anything doing. You want to monitor the trade yourself. Hereby, you can make a decision on your own, either to close the market at that point, or to wait for more profits, or to wait for maybe the market is going to reverse back and come back in profit. Those ones are scalping. You sit down with it and you close with your hand. You monitor the trade yourself, that nothing is going to distract you. But me, being a busy type, so most of the time I always say take profit and stop loss. But if I know that, okay, this trade, I'll be with it, I don't have anything doing, and I know what I've done, I know the risk management I'm applying, then I can look at it myself, then close anytime I feel like, okay, this profit is enough for me, let me close. Always be selfish to the market, but don't be greedy to the market. That's just my own strategy of trading. I'm always selfish to the market. Whenever I see a profit that's okay, this profit is okay for me for the day, I close. Then waiting for, it's going to make more profit. Before you know, it should come down, kick you out, and hit your stop loss. It's not compulsory you trade every day, Monday, Tuesday, Wednesday, Thursday. Just find the setup, enter the market, and if you know you want to scalp, if you want to swing, if you want to become a day trader, you know, I tell you, we have different types of traders. So you can decide anyone you feel like using. What suits you, that's it. Thank you.
All right, thank you very much. I really I appreciate that. I have one more question.
Okay.
What's your advice when, for example, in that very day, maybe one day of the week, there may be some of high impact news or something? What do you advise us to do?
Well, for traders that are newbies to the market, please avoid high impact news. You can go to your Forex calendar. What's the name? I've even forgotten. I'll check. I'll drop it in the group. You can use it to guide yourself. Maybe if you know you want to trade for that day, you need to look at it. Okay, whenever you see red, high impact news, they will mark it with red. If you see dim yellow, that means the news is is medium news. Do you get it? Then if it's light yellow, that means it's a very low news, which won't have much impact into the news. For high impact news, I always ensure that traders who are new to the system should avoid it because it can blow your account for you. If you are not careful, if you are not applying proper risk management, it can blow your account. So the best thing for a newbie is to avoid it. An intermediate self, I'll still tell you, avoid it. But only if the news is like very certain and you understand the news, you understand fundamental. Fundamental is a cause on its own. It's a cause on its own. Do you get it? To learn that one is another thing entirely. To learn technical is another aspect entirely. That's just it.
But the name is Forest Factory.
Yeah, Forest Factory. Thank you. So, Mr. Onayemi, have I answered your question, sir?
Oh, yes, you have answered the question. Thank you. Thank you very much. I'm satisfied.
Yeah, you're welcome, sir. Is any other question, please? Well, in the absence of no question, I will hand over the mic to our guy himself. Mr. David, please. You can take over, sir.
Okay, sir. Good evening, everyone. We want to say thank you for attending tonight's section. But I hope everyone is able to learn one thing or the other today. Mr. Damlari, Mr. L, Mr. Sheye, Onoyemi, Mr. Awe. I hope everyone, I hope you're able to learn one thing or the other today.
Valid.
Okay, sir. Okay, sir. Okay. Mr. Sheye, any response from you?
My boss, I'm with you any day, anytime. Just following your footsteps. Thank you for everything.
Oh, thank God, sir. And we are thanking Mr. Mushid for creating the time. Because we know that in this period, it is not easy. But we need to keep on learning. One thing is forex market is very wide. And the more we keep on learning, and I really love the way Mr. Mushid is taking us. To me, some forex traders will not even have time to teach. There's a difference between having time to teach and there's a difference between knowing how to teach. Some knows how to trade, but doesn't know how to teach. If you ask them your strategies, how do you use it, they will tell you, yeah, they will not tell you, they won't be calm like this to tell you how it is. But I want to appreciate Mr. Mushid for tonight and to say a big thank you. Mr. John, we also appreciate you also for joining tonight's section. We love everyone and we want to be best. We want to make sure that we have raise more traders through FXT4ME forex trading. I mean, at least we know that we are using automated trading system. We want everyone to be able to stand on their own and to say, okay, through FXT4ME, I'm able to start trading this and then to do this. So, and the assignment that the tutor also gave is, I want us to do it. There's nothing like trading by mouth. You can assume all what he said, you understand, you can do it until you start it. If you don't start trading, you're not trading. There's no way you can become perfect. Just like the best way to sing is to sing. The best way to eat is to eat. The best way to dance is to dance. The best way to know how to trade is you must continue to trade. You must continue to trade. So once again, I don't want to waste much of our time because I know we've spent a lot of time. And I also want to say thank you to everyone. Mr. Mushid, everyone, thank you for tonight's class. God bless you. We can all end the class now. Thank you.